Hey, what's going on, everyone? Welcome back to another public analysis for Bitcoin. I'm doing another Bitcoin analysis because we got overwhelming positive feedback from our previous video. And that being said, if you are interested in seeing some more balanced content for Bitcoin, please like and comment down once again below if you would like to see even more coverage during and after the FOMC meeting, which is going to be happening in moments' time. Also, subscribe to the channel if you haven't already. Everyone's support is important for me to continue these updates in a timely manner. So getting right into the narrowed down wave counts from our previous video, Bitcoin is still heavily within a major confluence zone in regards to the Fibonacci levels. We still have a few major Fibonacci levels to overcome, more notably the 61.8 and the 78.6, which is slightly starting to push it to a deep wave X or a wave B, but it is still very valid in terms of a correction perspective. So we need to overcome these in order for us to confirm any bullish confirmation that we're going to be moving to the upside sooner rather than later that this scenario is presenting. Basically, I have two narrowed down scenarios that continues right from our previous video, and these counts will have to be continuously adjusted until we get a fully resolved distribution. It's just no way to put this as we are continuously chopping within this zone. So in this first count, it just builds on the same idea of this working correctly to the upside for a wave X or a wave B. But instead of it seeing as a WXY as we saw from our previous update, I've shifted this into a more rare pattern of a WXYXZ because I think the sentiment also kind of fits in. It also helps us organize the internal counts a little bit better. Now remember, a WXYXZ is at its core a triple zigzag that is pretty rare, and an impulse wave can look deceptively similar, especially on the higher time frames. And this is why these two idealized wave structures are often confused, because you have five major swings essentially, and that is actually what is happening right now in my opinion. A WXYXZ, a 5-wave swing, and then you also have what could be a potentially an impulse structure which is more bullish. That is also a 5-wave swing on the larger time frames. But if you go a little bit deeper into the wave theory, you can try and even narrow down further when it comes to properly identifying it between these two. And one way is that if the internal wave counts is unclear, a reasonable conclusion can be reached merely by counting the number of waves. This is straight from the literature, and a count of 9, 13, or 17, depending on how far it extends, with a few overlaps is likely going to be a motive or impulse wave. But right now, even that is a bit hard to identify, and it makes this move up even that much harder to truly narrow down, which is why I am bringing this WXYXZ back into the table. I think it's a very interesting kind of scenario or spot that we're in from a sentiment perspective. And because of the rarity of both an ugly impulse that we may have and this very rare triple zigzag that we also may have here, the traders really often hesitate between labeling a complex correction as a WXYXZ versus forcing it into an ugly impulse. And on the higher time frames, these chained zigzags almost look identical to 3 pushes up in an impulse for waves 1, 3, and 5, and both are creating a sustained move with corrections in between. So right now, a WXYXZ is sort of mimicking an impulse because both create a persistent directional move to the upside, but the key difference is the DNA of the subwaves. But like I said, that is also difficult. That may have to give us a bit more deep diving into the actual psychology of the market to put more weight into the other, whether this is an impulse or a WXYXZ to the upside. Now, we can still resort to what could be just, having this as a WXYXZ, a WXY as a normal double zigzag, which is a possibility, but you can see it is starting to extend quite a bit, and I don't like how it's actually forming. And so this is why I am resorting towards more a idea of a WXYXZ, because the internal structures are fitting quite a bit better when it comes to internally organizing this. So this is the first scenario. Again, nothing really has changed since the last update. We were still talking about the possibility of, just ranging here around the 61.8% and the 78.6%. These two levels are very, very important. Anything higher, I would say it's going to be bullish at that point, and we can move to the upside. And that brings me on to what is going to be a forced impulse. And this is the best way I can kind of conclude, because this here was a highly distributive zone, right? And because of that, we might have to force this into another, what could be a combination of some sort, where this wave W is a flat, and then we have this wave Y as a very sharp zigzag of some sort. And that gives us that wave 1, 2, and then we have a 3, 4, whether it's complete now, and then just depending on the FOMC volatility, get another push down and then another push up. What the major implication that we can get from this scenario as an impulse is that we are going to have some support levels being met along the way, regardless of how many pullbacks that we get. But do expect some volatility to occur within the FOMC meetup that's going to be happening momentarily. And then we should be getting a pretty sensible 5-wave conclusion to the upside. That should give us that 5-wave swing that we're looking for against that WXYZ. And it's still going to be very difficult to identify between the two until we actually, come back down, retest this, and then move back up. So even with the impulsive structure, we still do need some kind of confirmation, not only in hindsight as a 5-wave move, but in the future predictability of a 3-wave pullback for a wave 2 of a higher degree. Now, this is just all idealized. We don't know the severity of the depth of how this wave 2 is going to be playing out. But again, these levels are going to be very important. When we do create a 5-wave move up, we're going to have a major swing of a low and a top. Then we can understand the Fibonacci levels using this range here, and depending on a 50%, 61.8%, or even a 38.2% level is going to be acting as support or not. And that right there, in my opinion, once we do get a follow-up, that, ladies and gentlemen, will give us even further confidence that a bullish continuation is going to be the higher probability. So to really put it into context and easily, simplified, remember, it is basically a 50-50 scenario at this point. Originally, we had, pretty much a 70-30 point, basically, in terms of the probabilities. 70 giving it to the bearish perspective from our last video, and then a 30% perspective of a bullish scenario. But this has increased. This has decreased, essentially giving us 50-50 in a weight distribution of probabilities. So that being said, if I had a gun pointed to my head, I would still, at this point, with the current data given, with these two scenarios in mind, I would still say until we actually break the 78.6%, I would still slightly give more weight to the bearish scenario that we are going to be working for one more leg to the downside eventually. And because of that, I still have to think that we are going to be working for what is going to be a retest of the $100,000 to the $105,000 levels, and possibly even further depending on, the severity of the depth, but we won't know until that happens. I don't think we should even go that far in terms of boldly predicting what's going to be happening. But I think right now, for what it is, we could say that this is still a highly corrective area. We are working correctively to the upside. We have what is very, very, notably as corrective moves, because still this is a distribution zone and the first leg is very important. And right now, instead of seeing this as a combo 1-2, we can label this as a WXY as a flat for this wave X, or even a possible triangle here. And then we have an ABC to the upside for a wave Y. And this here is what created a lot of fuss between the bulls and the bears, because this was usually a very simple, ABC to the upside even, or a WXY, giving us some pretty good proportions when it comes to the Fibonacci extensions. But we got a pullback, and now we're kind of already breaching back above the high. And again, that's what creates that imbalance, or rather, shall I say, balanced approach for how the corrective and versus the impulsive scenario is playing out right now. So until then, if you would like to see more content during and even after the FOMC meeting for how Bitcoin is going to be playing out, please do give a like and subscribe, and even comment down below. Your comments are very important. That is pretty much what gives me the motivation to actually continue these videos. And if not, we'll continue with what is more interesting for people, which is going to be altcoins. But again, I think a lot of people are starting to ramp up their interest for Bitcoin videos. And again, if you would like to see even more content for Bitcoin on the shorter time frames, again, we do offer a membership where I do give services basically with understanding how these shorter time frame sentiments are playing out in between, why these triangles are playing out. Why is there a three-wave move up for W? Why is there an ABC to the upside for a wave Y? And so forth. And I do narrow down the scenarios even further in between these public updates. So don't hesitate to reach out. The links are in the description below for both the Discord and Patreon. The Patreon is more of an entry-level service membership on a monthly basis that you can get 2 updates a week for Bitcoin. So there's a way for everyone to kind of dive into the Elliott Wave theory. From my view perspective, that is, again, as a certified Elliott Wave analyst, whatever that means these days. But I do have a pretty good grasp of how things play out and unfold on the macro. So if you're interested in seeing the shorter time frames, don't hesitate to reach out. Again, one last time, please subscribe, like the video, do whatever you can to support the channel, and I would be more than happy to create more content for these Bitcoin video updates. Thank you very much. I'll see you guys in the next video, hopefully within the next few days, even maybe today. Again, if you guys get enough likes into this video, I'll see you guys in the next video. Have a fantastic rest of the week. Bye-bye.